Yeah, you're leader of the free world. I'm sorry. It is different. It is definitely
donations to Clinton Foundation.
Donations to what? What donation?
To the Clinton Foundation. I'm sure they're all to feed the children and not to influence anything.
Dude,
I mean, it's the same. All I'm saying is it's hypocritical. It's hypocrisy.
No, it is not. Don't read some Trump-tard email and it says it's like the Clinton Foundation, a donation. That's not what this is.
We can launch a coin this afternoon, Sosnoff.
No, you can't.
America minted a new crypto billionaire, President of the United States, Donald Trump, whose Trumpcoin launched a few days ago to a great deal of enthusiasm, as Tom Sosnoff might put it. Trumpcoin is a meme coin that gained significant attention over the past few days. It aims to capitalize on the meme culture surrounding Donald Trump and the political influence of Donald Trump. But I think there may be some issues here and some reasons why people should be wary even about trading it. And I'm curious about your guys' thoughts on this whole ordeal. The Trump coin was initially offered to investors through an ICO, where early supporters could purchase the coin at a discounted rate, as these ICOs often do. These early phases help supply liquidity and generate the buzz necessary to have a successful launch. We see that after the ICO, the Trump coin was listed on several major cryptocurrency exchanges, Binance, Coinbase, Kraken. This allowed retail to come into the space. And ultimately, we've seen the explosion in popularity through media coverage that has helped boost the coin's price from a lowly level of just a few hundredths of a penny all the way up to about $80 before crashing down. But this is a meme coin like anything else. And when people are trading meme coins, there are really 5 issues that you have to be worried about: ownership concentration, the transparency of the project, the utility and use case of the project, market sentiment, and ultimately the regulations surrounding this particular listing. And it looks like this is a pretty ruggable type of project. I would argue that Trump's not going to rug it himself, but all the other tenants are there. Top 10 holders own over 85% of the supply. There's really no transparency into who the development team is at this point in time, at least that I've been made aware of. I'm not sure what the real world utility is of the Trump coin in terms of market sentiment. Obviously, it seems like it's at all-time highs given his ascent to the presidency. And then regulations. I mean, who thinks that he's going to enforce any crypto regulations during his term? Whether or not this is even a violation of the emoluments clause, I know bothers some people, but it happens before he takes office, so maybe not. Either way, though, Tom, I know that you and I were texting over the weekend about Trump coin, and seeing as how you have some strong feelings in it, I figured that we could talk about the Trump coin here today. Is this something that people should be trading, or any of its spin-offs like the Melania coin?
It's an unapologetic abuse of power, and it's sad, embarrassing, and disgusting on so many levels. And the fact that it's a family affair makes it even more disgusting. American public should just be grossed out, sickened. And if this is day 1, imagine day 500 or day 1,000. I mean, this is just all about how much can we grift for the next 4 years. Nothing else matters.
Is it any different than donating to a foundation or selling a book or a documentary? Or, I mean, Tom, I'm just trying to play devil's advocate.
I don't understand what you mean, Tony. It's all for him. He owns all of it.
He doesn't own all of it, but people buy meme coins all the time. I mean, just because you take advantage of a system that's horrible, does that make it wrong?
Yes.
When is the Bat coin coming out next, or the Saz coin, or the Vecchio coin? If people want to buy a worthless piece of garbage,
you can.
Why
try.
not?
You really can't. Just so you know.
And it definitely is on Coinbase.
You really can't, just so you know, do it yourself. You can try, but you'd never get anybody to list your coin. It's virtually impossible.
That's the point. But what is it any different than
Yeah. You're leader of the free world. I'm sorry. It is different. It is definitely
donations to Clinton Foundation.
Donations to what? What donation?
To the Clinton Foundation. I'm sure they're all to feed the children and not to influence anything.
Dude,
I mean, it's the same. All I'm saying is it's hypocritical. It's hypocrisy.
No, it is not. Don't read some Trump-tard email and it says it's like the Clinton Foundation, a donation. That's
we
not
can
what
launch
this
a
is.
coin this afternoon, Sosnoff.
No, you can't. Okay,
Hop on pump.fun and let's get the Trumpcoin going.
This is called Trump and Dump. This is a new.
100%.
But we always used to have this thing called "You're okay with pump and dumps, but you're not okay with Trump and dump."
No. I'm not okay with any of it. But it's a decentralized buyer beware market. If you're dumb enough to do it.
Come on, Tony, stop. If the leader of the free world brings you in, who you unabashedly, who you'll follow over a cliff if you had to, says, "Oh, I'm launching a coin," you're like, "Oh, I'm all in." Doesn't matter if it's your last dime. Okay, this is not the same thing. This is an abuse.
Now you're the advocate. I mean,
this is abuse of power. I'm not now. I've always been. This is it. This is abuse. Period. There's nothing else to it. This is abuse.
Okay.
Well, let's talk a little bit more about those executive orders that came out last night. Some people were tweeting at me, "Chris, what do you think is going to happen to the dollar or to bonds?" And I said, let's just see what all the executive orders bring before we ultimately jump in. And I think, quite frankly, looking at the price action last night in some of the currencies like the Canadian dollar or the Mexican peso futures, they gapped open higher and then all of a sudden they came crashing back down. But there were a few here that I wanted to talk about in terms of keeping a watch list together for some people, right? Have some tickers or sectors in the back of your head when you're thinking about these executive orders and how they could ultimately shape trends in the market. I identified 1, 2, 3, 4, 5, 6, 7, 8 here that are probably worth keeping an eye on and listening, keeping your ear to the ground to over the next few days. Probably see higher IVRs coming from some of these names moving forward as well, which is the whole point of the watch list. But topic number 1, the U.S. withdrawals from the WHO. This executive order yesterday initiates the process of withdrawing the U.S. from the WHO. Can this actually be accomplished? There's some legal questions around it because Harry Truman only brought the U.S. into the WHO after an act was passed by Congress in the 1940s. And so maybe there needs to be a congressional approval. But if that's the case, what does that mean for U.S. drug development? Keep names like J&J and Pfizer, the two big ones in the XLV ETF, on your list. And although those names don't typically see higher IVR, perhaps under an RFK HHS, we see a little bit more action there. I think the one that's most pertinent this morning, though, and perhaps interesting to traders out there, is what happens with this national emergency related to energy, because we're seeing that there's an effort to reduce the bureaucracy, increase the drilling output in the United States. At least that's the undercurrent of this EO. Whether or not that's something producers here in the U.S. want, drillers want here, is another story. We're basically at capacity in terms of how much well utilization we have right now. The way that we define well utilization in the United States are wells that can be basically turned back on within 30 days, and we're effectively at peak capacity right now. So there needs to be a big regulatory overhaul, perhaps some new tax incentives. Otherwise, U.S. producers, due to the technological increases over recent years, they become a lot more efficient at pulling oil out of the ground. So expecting another big jump in rig counts, maybe that's around the corner, but that would also probably mean a great deal of oversupply at a time when the U.S. is already the world's largest petroleum and LNG producer at the end of 2024. So this executive order, guys, focusing on companies like ExxonMobil or Chevron, I'm not sure how beneficial it will be if we have a drill baby drill environment. But I suppose a number 3 here that we could discuss, and this was a name that exploded after the Trump election itself, names related to the immigration policies. We saw that a lot of the immigration executive orders went into effect yesterday. The Border Patrol app, the CBP-1 app, was shut down. We've seen that deportations, Indian government's involved. So this is beginning to gather pace quickly. But companies like Geo Group or Core Civics, which are effectively private prisons, have seen their share prices increase dramatically since early November. And those companies are likely to stay in the spotlight here for the next several months and years. So taking a step back before I go further into this, Tony, I'm curious from your perspective here, with all these new executive orders coming out and some of the names of these companies, tens of billions, hundreds of billions of dollars of market cap, do you see any, particular opportunity right now in this market stemming from any of these EOs, or is it just more noise in the background? And quite frankly, we should just rip up this watch list I've been putting together.
You should rip up this watch list from an option point of view, because I don't think many of the markets here, I haven't gone through all of them that you mentioned, but some that I mentioned seem to be a little bit too wide.
Geo is very thin. Yeah.
Right. So from a stock point of view, again, in a regulated space like this, it's buyer beware, just like anything else, right? So if you want to play that game, which I do not want to play, but if you want to play that game, go for it. I mean,
Chris, my take on this is that a lot of these executive orders are not new, meaning that I don't think there's any in that list that surprise anybody. And the markets are too smart to like wait until they actually see it. So I agree with Tony. There's nothing that everything like with healthcare and stuff like, there was no chance Trump was staying, with the World Health Organization. I mean, that was, so these things are already priced in. So I just don't think that this is something that you'll see. And a lot of those stocks that you mentioned, they're not really tradable. So you got to be careful.
I think that's ultimately one of the bigger takeaways here, outside of the tariff news that materialized or didn't materialize overnight. Quite frankly, there wasn't that big shot across the bow with a 25% tariff across every good on the planet coming into the U.S. borders. The market has seen a lot of the writing on the wall for these executive orders. And if you think about Project 2025 or any of the information that the Trump team or Trump adjacent teams put out from Heritage or what have you over recent months, all these were contained within. And so probabilistically, as we see the odds of Trump's ascent to the presidency increase over the course of September, October, and into November, proxies like Polymarket and Kalshi had that writing on the wall. And even the bond market, as we discussed a number of times in recent months, was a proxy for Trump's odds going up. These things may all ultimately be priced in, at least on the executive order front. So it's going to take something new, something unknown, something that was a lower probability that the market more or less dismissed to actually drive significant price action here today. It's why when you look at right, go ahead.
I think that is the real thing. All the stuff that's known, all the stuff that you mentioned, all the stuff that's known, I don't think that's going to have much of an impact. I mean, I don't think that there's any executive order that Trump's put out there that would truly surprise anybody. And I don't think that, he's a pretty easy read as far he doesn't hide, he doesn't mince words in the sense like what you got. Like he is what he is, what you got. So I don't think that there's a lot of surprises there. And I think that what will eventually, either make this market adjust or that will make this market do something different is, if there is a surprise somewhere down the line, which I don't even know what that is, and neither does anybody else.
That's why they call it a surprise.
Right, of course. or if he's not able, if he fails at, trying to put some things in place. But, the reason that people believe his agenda, he will implement his agenda is because he doesn't have very many obstacles this time around. He doesn't have gridlock, deadlock, whatever it is. So he's in a good position to push his agenda through. And I think the marketplace is, I'm not sure what the marketplace is going to say about that. It's only day one, and we're kind of, we're right back at that 60-50 level in the S&Ps. I have no clue. I don't know why it would matter that much this market, but we'll see.
I bring all this up, and I brought this up a number of times over the past few years that I've been lucky enough to be on air, that people on both sides of the aisle tend to overreact to incoming financial and economic information. And if you don't believe me, just go take a look at the University of Michigan Consumer Sentiment Surveys and see the breakdowns by political affiliation, how they changed in 2016, in 2020, and 2024. The flippening happens whenever the occupant of the White House changes stripes. But the point here is that I know from personal experience dealing with a number of people on both sides of the aisle, those that overreacted to Trump's win in 2016 ultimately missed a number of very strong years for the market. Those that overreacted to Joe Biden's win in 2020 ultimately missed several strong years in the market. I think about what Paul Krugman said in November 2016 about the market crashing and never coming back. I think about what Vivek Ramaswamy said back in August of last year, calling it the Kamala crash and it was the start of the Great Depression. The point is that throughout all of this, the market is going to price all these things in. The headlines that we see are going to stir emotions, and they're going to motivate us to perhaps do things that we wouldn't do under any normal circumstances. So don't get too high or too low, right? It may be morning in America for some, or some people are mourning in America today. But the idea here is to have your toolkit and identify the market conditions and not overreact, because so much of this is known. We need to have an unknown come onto the field to play. These executive orders were an avalanche, but they were telegraphed widespread and well ahead of time. And so right now, traders shouldn't take anything, I want to say, too over the top. This is a fairly staid environment. In 2017, volatility stayed low all year round despite all the noise. So let's not get too far ahead of our skis here as we wind up this first full day of the Trump presidency. Tom, 1,459 more days to go just for you, my friend.
The 2017 was one of the worst years trading-wise ever because we didn't have a 1% move the entire year. And the reason we didn't is because, Trump's bark was loud, but he couldn't do anything. So there was no bite. And we just sat around and basically waited for a year and a half before we had any volatility at all in 2018. I think this time around it'll be a little different. And one of the things I mentioned on the show last night is I think we're going to change I think the news cycle is going to change dramatically under Trump. What that means, the financial news cycle, what that means is we are going to go from, like, under Biden, you had essentially nothing coming out of the White House. I mean, it was a dead place. He was dead man walking for a long time. And so for the last 2 years,
and literally, yes.
Yeah. So for the last 2 years, you had nothing coming out of the White House, essentially. Now, the market on its own just kept going higher because that's what markets do. But there was no kind of White House news. And basically the market just took over. And the market dictated the financial news, and everything was, there was plenty of macro stories, that kind of stuff. In the Trump era, which just starts, you can throw macro stories out the window. They have no value anymore. They had value when Biden was president because to guys like you, not to me or Tony, but to guys like you and other people that follow macro stuff, it was a storyline because that's all there was. Under Trump, I think it's going to be very, very different. Under Trump, I don't think it's going to be a macro story at all because I don't think that will matter. I think it's going to be all drama. And it's going to be executive drama. Now, the question is, how the market interprets each one of those dramatic sequences. That's why in 2025 and 2026, I think the market's going to be very different and more volatile than it was in 2016 and 2017. In 2017, because we're like the same thing right now. 2025 is like 2017. And I just don't think we're going to have another year like 2017. I think this year, the drama is going to have a little kick to it, and there'll be a little emotion with it. So I think the market's going to be, I'm hoping, market's going to be a little more volatile.
Well, the first test of that comes today. We've already seen that it's infrastructure week again, guys. Apparently, the big announcement's coming out today, 8 years in the making. So maybe if there's an actual infrastructure announcement as opposed to constantly kicking the can down the road, we'll actually have some tangible evidence that things are going to happen as opposed to just hearing a lot of barking rather than biting this first year. Gentlemen, it's always been a pleasure. Tony,